Hey, Full Throttle Traders, this is Jeff Yates coming to you. I want to take a couple minutes and outline the Tesla recent launch on the RoboTaxi. Couple key things on this. You should not be in a stock like this. If you are, pay attention to this. Watch this. 26 years doing this here. This is the same thing happens, rinse and repeat. Take a look at what happens in a case like this and what this can help you learn going forward. Okay, first off, they had their launch here in Austin, Texas, here the last day or so, and a lot of the stock is giving back a lot of those gains, and there's a reason why. And if you're new to trading, and even some of the more experienced traders have probably heard this or seen this before, but there's a couple key things that you want to be aware of when you're going into a launch of a new product within an existing company, or heck, just a new launch of a product in a company here. But Tesla gave back a lot of those gains in pre-market here. It's actually fallen as well. Let's take a look at some of the complications that came along with this RoboTaxi launch. Then I'm going to dive into the charting and show you where and why you do not want to ever be a part of this going into this this message that they were going to launch this RoboTaxi. So let's take a look here real quick. First off, there were some key problems on the Tesla RoboTaxi rollout. Again, erratic driving behavior, cars were swerving, speeding all over the place, drove partially into a bike lane before correcting, very cautious turning and whatnot, which is fine. It wasn't total autonomy. It actually had a safety driver that also rode there, at least initially here, and that's great. I think they should do that. But again, there were still issues in here. 2 days after launch, NHTSA launched an investigation after traffic safety, who pretty much just was sitting at bay waiting on this thing to launch so they can kind of come into the investigation. This is a huge thing, and I think this is ultimately going to be a great thing, right? Once they figure out all the details in here. Certainly, in our lifetimes, we've never seen quite this level as far as dealing with transportation and automobiles and things like that. So definitely something here, but there is a lot to be worked out still. Again, pickup and drop-off problems. There was confusing pickup points, or misdropping. There were missed drop-offs, missed pickups, and things like that along the way. Again, these bugs suggest logistical kinks in the Tesla's ride-hail system, which still needs refinement. And again, of course it's going to need refinement here, but the fact is that when you invest in stocks and things like that, you want that to be worked out. You don't want to go speculation, because the stock price is based on performance where it is now, today, what's going on right now. And again, it's not up to par, as you're seeing here. No full driverless vehicle yet. As I mentioned, I think this is a good thing in here. Had a safety driver inside. Anyway, lastly here, awkward braking, very cautious turning. There were some pretty good praises about it, but there was a lot more negativity. And from an investor standpoint, the stock showed up pretty handsomely here, midday, choppy, and then mixed, and then the investigation was peaked here late day today, and the stock started tanking in post-market in here. Anyway, a feeling of testing in public versus delivering a polished product. Bottom line, the rollout felt rushed. This is the bottom line. And while a technical milestone, it was also a reality check. The market quickly realized Tesla is nowhere near mass scale of this type of autonomous car. And an initial rollout may have damaged confidence rather than build it. And that's where a lot of the traders trade off of. Like, if it's hype, it's good, it's going, no flaws, they trade off that. If there's issues, there's going to be some holdback. People aren't going to kind of commit to that stock here, and that's why you're seeing a little bit more selling than there were buying today. Let's take a look at the picture on the stock on the charts, which tell pretty much everything. All right, so this is the charting here of the Tesla RoboTaxi, or Tesla in general here. As you can see, just a couple obvious things here at resistance. We kind of tinkered around here most of this year, Liberation Day, back to retest multiple times before it kind of got going, and a lot of stocks did. It's not specific to Tesla. We did come back down and retest previous resistance over here. You can see this here area, and then of course the retest breakout after consolidation, moving into the 8-period moving average, then pull right back on that. And then once it broke the 8 here, it got lost again. Again, this is just some of the hype centered around the thing, the rollout, the delay of this rollout and so forth. But once Tesla started getting going here, this is where the hype started accumulating shares here. You can see right in here, they rode about 281 to 309 that particular day after gapping down, bullying in here, creating a kind of a 10 bar, meaning there's about 10% of the wick on either side of the candle. Closing at the top would leave us into the bullish clues. continued gap up, consolidation, but here's the big day right here. Rollout day right in this area, right up into this resistance area, probably within maybe, I don't know, $3, $4, $5 for the resistance area. But there wasn't that too much. People got behind this stock up in here. When the problems started coming, then they basically did not go up. It opened up here, a gap up off the overnight hype, but it didn't go. The open here was 356.11. The high was 356.26. Literally on the spot when 9:30, you could have bought puts in this thing here and probably bought a Tesla at the end of the day. But it came down here. This is a damaging bar. It came way back down inside this bar. Typically, you want to see these bars close at the high of the previous green day margin, no more than 30% of that. When it starts moving into more than 30%, what's it's telling you is that more than the profit taking is being taken out. There's something that's amiss with the stock in general, right? And that's why we look at these 3-bar plays or 1, 2, 3 patterns and things like that. You don't want more than 30% of the bar. When I looked at this chart here, especially later on in the afternoon, when I saw the penetration back in the previous day, that should not happen, right? Not to be a successful move higher. Now, it may go back and do some retest and kind of move around, but I think Tesla's coming down for a while. It's not ready for this actual move yet. If it does seem to get up, I think it's going to have a harder time getting to this resistance area. So we'll see down in post-market today. Again, here's the reason why you shouldn't buy Tesla, or any stock for that matter, out of the box on speculation purposes, because this is technology, and that's probably the worst to do. People are buying right here off that speculation, accumulating here. This is nothing that the product was just coming, right? People buy into hype. It's almost like going to a concert and hyping the craze out of it here, and the seats for those nosebleeds are ridiculous. So once you get up on that, you get to that intrinsic value. It's actually concert day. Those seats are just seats, and that's what happens in these stocks. They get up here, then hype, the conversation, the water cooler conversation starts going on. Everybody's talking about retiring early and how this is the biggest thing, and they missed the NVIDIA run or they missed whatever, but this is going to take them to the promised land. It just isn't so. But they buy on that. So this isn't company valuation. This is basically buying because they want to be the first in. I'll let you in on a little secret. Being last in is probably better than to be first in on any stock when you're seeing this news and this big anticipation of a breakout in a new technology. Almost in all cases, people will sell the news, right? They bought the hype on this. But the key on this is sell that news, sell that hype, sell that opening day, right? And if so be you miss it, that's great. You rode up into the candle, you sold it here, get it on the pullback at a better place at resistance at that point here. Never buy on this. It's good to buy on speculation. Go about maybe a week to 10 days out. Yeah, start accumulating smaller shares and build into that anticipation, but never buy on rollout day. This was rollout day. It actually did pretty good if you bought here, but once the dust settled, they found all those issues with Tesla, and there were going to be some. The reality is, and investors weren't happy about that. And investors bought here. Big money moved this market here. This wasn't mom and pop. This wasn't your grandmother's money in her coffee can, right? This is huge money. Billions upon billions upon billions of dollars moves that market, moves that stock upward like this, and they're just the first ones to sell. They made a profit on it, but they weren't ready to keep it at that point. It's the little retail traders that buy all the hype up here that end up losing in here. So I hope that helps. Basically, buy that hype, sell the actual rollout, sell the news, or buy the hype, sell the news. You heard probably buy the news, sell the hype, buy that speculation, right? Buy that moment of anticipation going into that extrinsic type value, but sell it on the opening here. And again, if you're wrong and it's the biggest thing since sliced bread, you can always buy it at a better place on the pullback up in here. Hope that helps. Jeff Yates, Full Throttle Traders. Come to our room. Check us out. Full Throttle Traders is live all day in the room. We participate in credit spreads, day trading, in and out of stocks multiple times a day. Long-term trades. Check us out for a free trial. I think you'll be glad that you did. See you the next time.